audits is the independent examination of, don't forget the history of audits. I think we are into mercy. We will not be financial. I think we are into IT audit. We will not be mentioning financial. Okay. So, but because we are financial people, that's why the definition comes and of the financial statement. And audit is the independent examination of the financial statements of an organization with a view of expressing an opinion on the financial statements. On the financial statement, like Daniel said. Okay, so keywords: independent, and you remember it's coming from the history of audit. Independent, that is, the person that will intermediate must not relate directly to both parties involved in the transaction, and which is us now, the accounting practitioner or the auditor. Purpose of an audit is to enhance the degree of confidence of intended user of the financial statement. And who will be that intended user? That's it. Shareholders, okay, and other extended users like taxman, government, employee, adina, but complex making monetization. Okay, so objective or objectives of an audit. The primary, yes, please. The primary purpose of an audit is to express opinion. Every other thing, they are secondary. The primary purpose is expression of opinion. Not to look for fraud, even though fraud is key and to bring an organization down, but it is secondary to our engagement. The primary engagement or purpose of our engagement is to express an opinion. So therefore, expression of our opinion, we only need one or less than a page. Yes or no, class? We only need half a page or a page. Our work is done. So the primary objective of an audit is the examination and expression of opinion. Also, to prevent fraud, to prevent error, to detect fraud. And of course, audit has disadvantages. If it does not, then people will not be carrying it out, especially the entrepreneurs that like to be conservative and save their money. But because of its advantages, especially those audits that are not statutory, to add credibility to the accounts, detection of error when we have auditors or when documents are passing through auditors' table, you can easily detect error. Professional advice, like Lucisola said, you can easily advise them that you can do it this way and you will achieve better results. It makes it easy to source for funds, especially the bank will usually demand for audited financial before they can lend loan. For tax assessment, like if you audit your account as an organization, they will not give you DOT, less of tax, which they usually do have estimates. So, but if the audit as auditor has audited it, they will not give DOT. So those are some of the advantages, and of course everything that has advantage in life must, so they have disadvantage. audit fee. Then the auditor was paying more. So it comes with audit fee, also inconvenience, especially for staff member, because auditor must ask question, and during the time they are asking question, the staff will stop working. Sharing of company information. There are some organizations that will have some trade secrets, and auditor would like to know, and they may not want to still release it on time, and it's a demerit to audit exercise or of audit exercise. Then we will talk about levels of assurance which had introduced us to. But now let us go into detail of it. So far, any question? So we move on. Then, levels of assurance. The degree of assurance can be provided. That can be provided or for reliability of the financial statements could be the amount, based on the amount of work conducted like auditing and the result of that work that we generated. Basically, there are two levels of assurances that we earlier mentioned. If we do not have high level of assurance or reasonable level of assurance, we will definitely have low level of assurance. I don't usually like to give that much weight because it will get confused. High level of assurance or reasonable level of assurance will be found in what? We said now absolutes. In audit work and audit work alone. Why? Limited or low level assurance can only be gotten in assurance and diligence. So let me ask this question. In which of these two can we have highest level of assurance? In which of these two, that is, in audit work or assurance work, in which of these two can we have the highest level of assurance? Oh my God. It's not. That's when I came back and asked that same question. I said, not in this world shall we find highest level of comfort, of confidence, of assurance. So, therefore, not in audit work or assurance engagements can we achieve the highest level of assurance. Do we understand? The reason being that, let's take for example, audit. Audit dwells on statistics. We take our sample, we still get the under planning, sampling, where we can how to approach our audit. So, okay, we want to do sample. Let's test for 50% launching and like. And we base the expression of our opinion on that. Are we getting it? So we now ask ourselves, if we tested 50% of the transaction and like, how can we say we have absolute or highest level of assurance? Do we get it? And of course, assurance because audit is procedural, methodical, and like, and it's regulated. Okay, let's move on. So high-level assurance is when the opinion expressed by the auditor puts high confidence on the financial statement or the subject matter worked on. It is moderate assurance when auditor expresses that nothing seems to have obviously gone wrong. And now we are talking about the moderate level or limited level, which is assurance level of exercise. Nothing has actually gone wrong that was observed. Audit-related service engagements undertaken by an accountant or a firm of accountants to perform such assignments as, so we are talking about assurance, some of the assurance engagements. That is going to go back to it. Don't forget that when I indicated chapter 11 and 12, you will find it in my notes, combined together in chapter 1. So these are what we are going to find in chapter 11 now that we are discussing. Audit-related services. So when we are talking about audit-related services, these are some of the assignments that we will find ourselves undertaking. A review of data, agreed upon procedures, and compilations. We are going to define them one by one. Review of data, agreed upon procedures, and compilation exercise. None of them relate directly to it, but they are assignments that accountant or practitioner should be able to carry out. So review of data. So when we say review, what comes to mind? Let's start from here. With reviews, we want to put. So when we say review, what do you mean? Somebody else. Yes, sir. Yes. That's review. So when we're talking about review, somebody first of all must have, I usually say it, review it. So we are called upon to take the same one at it. Because we review. Okay. So like the HR, let's say our human resources manager had drafted HR policy. Say, other accountants, you are welcome. Can you take a look at this and maybe you can propose based on your experience? Is there any way we can put on it for MD or the board finally approve it and it becomes binding on your employee? Immediately we engage in that is a review work. And you see, that work is not regulated, it's based on our experience. A review provides a low or moderate level of assurance. If I will advise, just go by low level of assurance. That the information under review is free from material misstatement. And when we have low, like we said, that nothing has come to our knowledge that anything has gone wrong. It's a negative opinion we are given. The accountant's opinion is usually expressed in form of negative assurance. That is, we are not expressly stating that to the best of our ability, and our opinion is the financial statement has been prepared to be true and fair. So it's a negative assurance. We are not telling the shareholders or user of information that anything has gone wrong, but we are saying that nothing has gone wrong that comes to our knowledge, which is an opinion that there is nothing obviously wrong in the information. For example, the opinion might be nothing has come to our attention to suggest that the information is materially misstated. Agreed upon procedure, and please class, listen very well. We are still going to go into this more in details, but now that we see, let's do it. When we are talking about agreed upon, it's a reverse of audit. And this is one of the reasons we should be in class. To be able to experientially interact. So, agreed upon procedure or assignment is the reverse of audit. In audit, the auditor will tell the client, these are the methods we are going to use. IFRS standards, IAS standards, we are going to report back on this side methodology we are going to use. This is the risk assessment we conducted, it's our approach and plan. But when it comes to agreed upon, I said it's the reverse, it's the client that will be telling us what to do. So you see that it's complete reversal of the definition of audit. So agreed upon exercise is carried out when the management or anybody engaging in that service has some information and for whatsoever reason, maybe due to constraint of time and life, they do not want to carry it out by themselves. Or maybe they do not want them to be response and things like that. So now okay, auditor, please go into maybe sales department, what to do to help us review our sales department, and please collect so and so documents. Do this on it, and please get back on the items. So they tell us where the issue is, they tell us what to do and to report back. So it's not for us to say, okay, this and this. These are our findings. We are not expressing opinion. We are just to help find a fact-finding mission and deliver it to them based on the agreed procedure they agreed with us. And that is why it's called agreed upon procedure. How we agree to carry it out. So eventually they may be able to pinpoint their suspicion. And it's possible to they may not, but that is not our own issue. Do we understand? Our own is to carry the assignment out as agreed upon. And that is why it's called agreed upon procedure. Agreed from my notes. Agreed upon procedure are adopted in an engagement where the party, that is client, hiring the accountant or the practitioner, specifies the procedures that should be followed by the accountant in performing the engagement. Please don't forget, this information should be very useful, and we are going to build on it by the time we go into some types So compilation, just as the name implies, you compile something. And when we compile something, we put relevant information together from somewhere. So compilation, example is tax. Tax is an example of compilation assignment or exercise. So our financial statement had already been prepared. Then we begin to put together relevant tax information. Don't forget, when we are compiling, not everything in our financial statement will be needed or be for tax purposes, especially in specific tax purposes. So we put together relevant information. The allowable, allowable, we put percentage upon it to arrive at our tax assessment and the like. So that is compilation. So we compile those things that we need from the general information. Classes or types, okay, question. Compilation or review? No. No. They may be similar but different. Like in the review, I mentioned HR, like HR policy. Somebody has done something that will take a second at this. Yes, we have compiled. Like, let's say tax consultant to the client or a person of networks. That is compilation. They are a bit similar, but you could see the difference. So types, okay, at this level, this question actually may not come at this level, but it's good that we know it. And that was why I put the name together there, because I was doing both skill and professional. Yes. Let's try out. So we can classify audit by nature, and we can classify audit by method of approach. By nature, basically, it's either audit is mandatory, which we call statutory, or it's not, which we call private. So by nature, it's either it is statutory, that is mandatory by the law of the land, or it is private, that is the entrepreneur just which that audit should be conducted on his organization. Of course, I put internal audit, and you see that in between the method and the nature, it's both vision. So, method of approach, and this is so common. In it, we now have final audits, internal audits, interim audits, continuous audits, procedural audit, balance sheet audits, management audit. Is there any one of it that will not audit before? Hello? But let's quickly run through it. Statutory audit, basically, that means the law of the land requested for it. And in Nigeria, that section of KAMA, now we not have KAMA 1990, it's KAMA 2020. How we have so KAMA 2020, of course, it is the same section. Yes, I amended a lot of things, but this section is still in. So, for the PLCs, that is public limited liability company or public interest organization. are mandated to prepare audit every year. So it is statutory. And those are the ones that fall under statutory audit. Well, see, audit is so common, especially among private organizations, because of this advantage, like the banking issue that we mentioned. But statutory is not mandatory. So by nature we have those ones only that are mandatory and only for the PLCs. Of course, we agree that not only PLCs are carrying out audits. So, and the rest falls under private audit. Okay, then we have by method. Final audit in our organization, we will be familiar with it, especially if we are working in the accounting department. So final audit simply means audit that comes at year end. Please don't forget. When I'm saying it seems so easy like when we are in your state that this OYO 1 hour one. When now a bit confusing. So final audits are audits that actually come at year end. Or after year end, or immediately after the year end. So like final audit for last year now, some organization will be starting, and some will start in February, because books many times you get won't have been closed right now. But depending on how speedy an organization will prepare their books. So, but they usually come at year end or immediately after year end, like Big Solar said. And that's a major distinction between interim audits and final audits. So what is final audit? It simply means audit that is intermittent, that is segmented. So you can say, okay, audit of January, February, March will be conducted in April. Yes. Yes. So April, May, June work will be reviewed in July. So that is interim. And many times the financial institution usually use interim audits because they are mandated to submit their quarterly reports. And you know you can't submit quarterly report without being independently reviewed. So they usually go for interim audits. And that helps them to easily submit final audits yes on time. So, like I think in Nigeria now, all banks should submit latest by March. You understand? And to imagine them, well, they are usually able to achieve it because by September last year now, by October, the first 9 months they are already on ground. So they will just review October, November, December, and add it to their findings, express their opinion. So, and those are the advantages of interim audits that indirectly we are dealing with now. Okay, so another type or class of audit is continuous audit. And as latest IT accountants, that is information tech generation accountants, continuous audit is actually good now. That is the truth. So what is continuous audit? It simply means audit non-stop. And we can use the word audit in real time. Like, I want to believe some of us use what's it called? Online shopping. Online shopping. Those bags. Those So when we go to all those our shopping online and future. They do continuous audits, real-time audits. And that's why they know when you order, they can bounce back and they will respond that, oh, sorry, we run out of stock. Because they've implemented some form of review into everything. And that is what the whole world is doing now. So that is continuous audit. It's an audit that we do non-stop, especially as transactions are occurring. So maybe we can call it real-time audit too and the like. But even before the advent or serious advent of IT, continuous audit has been. So we are just to use layman language. It's audit non-stop or review of work non-stop. Balance sheet audit. What do we call balance sheet now in our generation? So, can we say now I'm not school? Oh my God. So, statement of financial position audit. So, this one is very rare, but of course, it's not non-existent. That is, it could be used, but it's very rare. Why is it rare? It carries greatest liability. Or it comes to the greatest liability if it actually materializes. It may not, but if it does, the liability is very onerous. Why? It's an approach to audits in which all the practitioner does is to take on the statement of financial position. And what will be the item of financial position? Items on our financial position. Okay. You know all these situations, we have to test it. Correct and not correct. Yes, yes. So let's complete this. Okay. So all those, so they are not going into ledgers, they are not going into vouching, they are not going into travel. A lot has been left untouched. Ledgers forms our travelers. From our travelers to our statement of income and what do we call it? Statement of comprehensive income. Then we'll now have one aspect of statement of comprehensive income into our statement of financial position. And which item are we going to find there? Class. Our name. So among what we mentioned, receivable, payable, non-current assets, liabilities, and our retained earning. So only retained earning is coming from outside, and which is the summary of our general ledgers and trial balance. Am I taking us into index accounting? Okay, so the practitioner has neglected all those and just took on himself the balance sheet, statement of financial position alone, and express opinion. You see that the risk is quite large. So we use statement of financial position audit approach when the internal control system is viewed to have been the strongest. And you may agree with me, there is no strongest control in this world because it is man-made in the first place. Do we understand? So anybody that uses that is as a practitioner carries good liability. At the end of the day, it materializes. Last but not the least is the management audit. Management audit is actually encompassing class. Management audit is encompassing. And to me, management audit is a work that better use internal auditors. Because management audit comprises of any aspect of the organization, namely finance, sales, marketing, operations, security. That's so now. I will get it that. So it's encompassing. And that's why it's management audit. So it takes somebody that will be on ground or always on ground to achieve it. Even though many times organizations use external consultants for management audits. And the disadvantage of using internal auditor for management audits is this. When it comes to report level, don't forget, especially when internal auditor happen to be localized as a staff. It's not easy to work with staff. As a staff, for you to be external management consultants, they will be able to do that. So, it's a disadvantage or a scope limit to internal auditors work. But it could still be achieved using internal auditors. But because of that, it's better outsourced. See, I'm giving you a holistic, practical, what is obtainable actually outside. Okay. So this has actually prepared you for more than what even syllabus is. Now we've gone to the foundation. This one that is skill. Skill level of the is true that is very foundation. And people that are coming to join us will not actually have advantage. So if you scroll down, you see that everything will be scrolled. So I'm scrolling, we are scrolling too. So I will just move on. Audit related service, I will move on to. Can you see parties too? Parties to engagement, which we've dealt with. That's page 7. I'm still moving on. But those are the things that we discussed. So I will move on and stop at page 8. We've dealt with review, right? So we've introduced ourselves to review. I told us task types. So now let's go into it in details. Are we tired? Should we rest for 5 minutes? Page 8. That's on my laptop. I don't know what page your phone will be reading. Review now. Yes, we will see attestation, engagement, and direct reporting. Okay, yes. So we did introduce ourselves to that because it's a deeper level of knowledge. Okay. So when we talk about review, we said is taking a second look at something, and we give an example of like HR policy. What do you see to do the course? Let us get your own. So we don't need to express opinion and like ordinarily to it, but when given a direct reporting engagement under review, which we specifically indicate at the contractual onset, from the onset, that you must report in writing your opinion. And that's why we call it direct reporting. To attest to our findings or our opinion. To attest, I read from my notes, to something means to affirm, that is to vouch for. In attestation engagement, the practitioner is engaged to attest to something. For example, a practitioner might be engaged to attest to the fact that certain procedures within an entity are being performed in a described way. The practitioner will not comment on the quality of the procedure, but will simply attest to the fact that they will be performed. Do we understand? But when it comes to direct reporting engagements under review, are we together? You must put pen on paper and write something. So that's the only exception to the rule of review. Yes, like we said, name two types of attestation. Direct attestation ordinarily is not but when it comes to direct reporting, the onset, you know, you agree with your clients that get back to them and write. And that's actually what I want to point our attention to. And we see that even though we report in writing, the best confidence and assurance we can give them is still negative. Because an assurance. Are we eyeing together? Due diligence is another type of protection at the deeper level. What's the time now? Yes, this is 5. Let's say 5 minutes. But my own was 5 nights. So let's come back. Start in 5, 5, 6, 7. So please stretch. Drink water and the like. Because it's actually 2 periods. So you add due diligence. What does it mean? Madam. What does it mean? No problem. You are welcome. Okay, you had a meeting, yes. Okay, like what? Relating to the conventional behavior, due diligence, independence of the CSME? Yes. Be sure. Yes. I'm wondering, I'm trying to put it together. I cannot. Yes, okay. This should be professional accountant, like need the objective or quality assurance. Okay. That would be due diligence. That would be like under our professional behavior, like due care. Yes, due care. So to have due care, you have due diligence. But I'm trying to another usually are right. And due diligence always, usually, not compulsory, or always entails buying or selling. Yes. So maybe management buy out, that is another management of an organization wants to become shareholder of an organization, or there is an outside investor want to completely take over the organization, or take over, or acquisition, or merger and acquisition. So majority of the times it entails an organization becoming a commodity and exchanging hands. Like we buy, like we just go to water. You understand? So that is due diligence. So it's an engagement in which a client engages practitioner to help find facts about the intended item to be purchased. Usually a company. Do we understand? And why merger and acquisition, especially is so common in Nigeria in financial institutions, why it fails is because due diligence was not properly conducted. Due diligence was not thorough or not done at all. So, majority of the time, that's why we have merger and acquisition failure in Nigeria, which always affects the staff of the organization. So let me read from our notes. One of the most common forms of direct reporting engagement is due diligence. The term refers to any engagement where the practitioner is engaged to make an inquiry. Direct reporting engagement is due diligence. The term refers to any engagement where the practitioner is engaged to make an inquiry or inquiry, depending on whether you live in US or in UK, into the accounts of the organization or activity of an entity. And when I treat this, usually I use the case of whether husband and wife, or fiancé or fiancé, how do we call it, or boyfriend or girlfriend, because it's so suitable to it. When we are in Yoruba, they say, "Attestation." I don't know what they call it in Daniel's language. That is, we are in courtship. So when we are in courtship, usually, I want to play, you will have experience. It's usually artificial. It's not full disclosure, yes or no. Everybody wants to show their positive and strong side, yes or no. Until death can only do us part. When we say we do, I have been there before, or you are just praying, you are praying Baba. So it's there that the true color will show. We will now know whether you've done due diligence or diligence was not due, or duly executed. So, due diligence, the buyer, just like the person or persons in courtship, we hide their weakness and show their strength. So likewise, the person that want to sell high, yes or no, even though the commodity is bad, and the buyer too want to buy cheap and buy good product at a cheaper, understand? So if care is not taken and due diligence well conducted, something will boomerang. And then the person that want to buy cheap and buy quality may end buying expensive and inferior. And at the same time, the person that want to sell high may eventually to ensure that liability, don't forget weaknesses and liability, yes or no? To ensure that as much as possible liabilities are exposed. Because the seller will usually give us the good assets. We have branches here, we have this here, we have this number of staff, we have this cash, liquid cash, and like those that they are owing, they are creditors and like that's not the key, they will not mention it until the buyer now bought. Creditors will now begin to show. But we didn't discuss this. Which name did they write on the version? The company you bought. And so, at that time, that is why mergers usually fail in Nigeria. But by that time, the buyer now do not know how to manage the matter. So we actually bought so expensive. Because those creditors that show must be paid because they are legitimate creditors. Do not well considered into purchase consideration. We still remember purchase consideration. Because ordinarily should have been factored into purchase consideration. But the seller will want to, you understand, hide them and cash out, take his or her money and go. Leave the buyer with their credit. To later be exposed. So due diligence, I'm reading from the second paragraph. Due diligence work is most common referred to in the context of merger and takeover or acquisition. The work involves obtaining information about the target company, that is, the company you want to buy, prior to takeover or merger. The objective should be to find out everything that may be relevant about the target company. See, everything that may be relevant. Company's operations, financial performance, financial position, and future prospects. So even future prospects is important. Like, should I mention the name of this company? Don't let me mention. A company into telecom, one of the firm is there. They've gone under because they could not foresee the future. So let us say somebody bought them maybe a month or 2 months to their falling. And future now will caught up with the new owner. What will have happened? Even if they died naturally, but let's imagine that they were recently bought over and the future will not consider that technology will overtake their phone production. So the buyer had bought, the old shareholders had left with their cash. The seller now has issues of future to deal with. The company is not going to throw out future. So even in due diligence, future must be considered of that product. How relevant would this product that this organization want to buy? How relevant would the product be in the nearest 2-3 years? The practitioner, that is us now, will also interview senior management of the targeted company and also other key employees and possibly external third parties too. Due diligence work does not involve tests of control and like, but that's auditor. We are going to get to test of control and plan because you need to go into their internal control system, which they may not want an external party conducting due diligence to have access to. Nor does it involve substantive tests. Due diligence work is not a form of audit work. Do you understand? That's why we are taking it here under other audit-related services. So, some of the items to investigate, we are actually going deeper, and it's good for you. Some of the items to consider if you are engaged for due diligence. The financial performance and financial position of the organization, I think as accountants, that one will come naturally to us. That's our strength. But also, operational matters in the company we want to buy must be looked into. How do they operate? Which technology do they use? Do we need to use this technology, or there are better ways of doing it? Then I say we found out that there are better ways of doing it, which they've not incorporated. We must incorporate it and tell our client I want to buy, so that by the time they are assessing the purchase consideration, they will factor it, the amount that we take to implement that idea, new technology. If not, we will be at disadvantage in the market. Do we understand? So, how effective and efficient is their current operational matter, the technology they are using or not? Then management representation. So we may need to ask the management to write to us, that's what we call management representation, to put pen on paper and discuss with us what they understand about the aspects of their business that our clients want to buy into. The identification of party, like we said, they will always show their strengths and they will even exaggerate their strengths. So it's nice to us that we need to go to do physical verification. Okay, you said you have this asset, you have this generator. Where can we see? So we check it, we see the how good it is, when the purchase date and the like, what will be the nearest future lifespan of the thing and the like, so that we'll be able to calculate our purchase consideration effectively or recommend for our client that has engaged us on due diligence exercise. So accountants who perform this exercise and only them who perform it too. Can achieve is negative assurance. Why? Because it's an assurance engagement. It's an assurance engagement. Professional skepticism feature in our notebooks. I would not want to introduce us to it now. Let me introduce us to professional skepticism, but we will still deal with it. We will still deal with it under another topic. Let's touch on as much as possible. Follow our notes. Skepticism. That should be page 11. I put in it. I want to believe it appears in food. Does it appear in food? I put it. It's actually a subtopic. So here is just like discussion, but it's a subtopic. It's a subtopic. So when we're talking about professional skepticism, we are talking about the mindset of a professional accountant or a practitioner to always ask questions. That is, not to believe everything on face value. He says this and we take that. That is not professionalism. Professionalism entails us to question something. So it's not about not believing somebody or what somebody has said. But as a professional, we must be able to independently verify something. Then we say, okay, yes, this is a blue mark. Not because somebody says it's a blue mark. No, this matter who have this brand blue. But the real thing inside is the actual. Yes. I gave you a blue marker. not verify. You say yes, it was a blue marker. But the person using it is telling you it's a black marker. Who should you really believe? You understand? So that is professional skepticism. So it's a mindset that finds, examine, and re-examine before we express our own opinion. So we just don't take things that because they've said it. Professional, we must verify things. So we are talking about professional skepticism. I said it's a mindset of professional that asks questions. It's not disbelieving. It's not that we do not trust the person that is giving us his or her view. But as a professional, we are trained to independently examine something. And that is what we call professional skepticism. That is a mindset that always asks questions. Why is that? When is that? How is that? Who is that? And things like that. That is professional skepticism. So when you see your maybe auditor comes and you are like, well, I checked it yesterday, but I'm saying yes, I know it. And I have the approval letter to that. So like, actually you do not believe me. So you understand that that person is only operating under professional skepticism. Because sometimes people take it personal. So you didn't believe me. I told you I have time to discuss this thing with you. No. It's never that. That person is only doing his correct professional work. The way it ought to have been done. Yes, when you are professional in office sometimes, yes. I agree with you. You feel like this guy is just too troublesome. You see, the only one in the office or something like that. But a professional actually will understand that kind of person. He or she is only being professional. Sufficient and appropriate audit evidence, we will discuss that in details in evidence, which is 40% of our syllabus. Procedures for review of financial statements. I think we should just discuss this. Or maybe I should ask you come out of our show. You are using financial statements. So let's say you want to review the cost. What are you going to do? What will be your business? You can help out. Yes. Okay. Okay. Yeah. Because that was actually information source. That you say nobody can hold it. That's in accounting document. There is no transaction in isolation. Okay? Okay. Okay. Paid. That's the reason you are collecting receipts. Okay. You'll be able to establish the real fact about the balance. Because it's possible the debtor may not be debtor is actually creditor. It's possible. declaring ledger as there is actually in their that's okay. Good. Procedures for review of financial statements will usually include the following. Practitioners should obtain an understanding of the entity's business. So now, I ask you a specific question, but this is general. First of all, we should have understanding of the organization. What does our clients, what are they selling? Which market are they into? These are the things that we must first of all know about. Who is the manifestor? Who is the MD? What are his or her experiences? Education and the like. What's the name of the last employer and the like? All those facts, they are important to the running of the current organization. So in audit we call this first step familiarization. We must familiar with our clients. And if you are a banker, they say or give new customer that want to open bank accounts, they will give KYC form, know your customer. I want to give because I feel this form. You fill the form unless you don't have bank accounts. So what they are doing in this first step, they are familiar with the customer that want to open the accounts. They will be asking for our age, they will be asking for our address, home address, says bring a NEPA bill to ensure, to confirm that the address stated was actually, that is the essence of collecting that NEPA bill, like your passport and the like. So it's all about familiarizing. Like maybe at the end of the day, the passport that they got, the age was different from the one put. Let's say the person that wants to open their account is less than 18, like in Nigerian law, and that person wants to open an account as an adult. So I won't open children and it's that your moment that we sign, do we understand? So those are the advantages of familiarizing, because if they do not do audit, they will not be able to advise and put the real account how it should be executed. The practitioner should make inquiry into the entity's accounting policies. I want to believe we must have seen that pages on different financials. Practice and procedure, including the preparation of financials. Material assertions. What are assertions? In the financial statements. From the word assert, it simply means affirm or affirm. Just like that attestation. Assertion usually comes from the directors to the auditor, telling the auditor what they know about the transaction under review. That is what we call assertion. Now we are going to get into it in details. And we need to go back because the topic is a skill level topic. It's not this level, but I will go back to it so that we make assertions. We have like 7 assertions. We will get into it. Don't worry. Material assertions in the financial statement that are subject to review. Decision making at the board meeting. You see, when I was talking about using internal auditor or external consultants, decision taken at the board meeting is part of what ordinarily we should review, and other meetings of the entity that may affect the financial statement. So when we are working, we don't only look at the financials alone. We must consider non-financials too. Because majority of the time, the non-financials will have biggest implication on the going concern of the business entity. The completeness of the accounting record this is one of the assertions. Completeness, accuracy, and the like. But we will deal with assertion separately so that we will not get you complete yes. We will deal with it as a subtopic. But now we are discussing what ordinarily an auditor should is the assertion. Yes. We are going to deal with assertion separately as well. But I only mentioned that completeness is one of the assertions. Accuracy is one of it. Cut-off period is one of it, and the like. But we'll get to it in details. They are not there. Comparing the financial statements under review with the financial statements for prior year, we will see that in any financial statement, we always have a prior year. Yes, sir. Like in 2020 now, you will have the financial 2019, 2025. They are sides. Yes. Because that is what IS works as representation, accounting presentation. So it's as a matter of IS. The only reason an account will not have comparison is, let me allow you to answer. When will it happen that an account will not have comparison? That is previous year and the current year under review. It's just that that's the only exception. Any other is not allowed. Comparing the financial statement with the anticipated results and the financial position of the entity, the study of relationship between the elements of the financial statement that should be expected to conform to a predictable pattern. Other procedures that will usually be carried out in a review of financial statements may include discussions with the complex auditor or complex secretary and maybe key staff, obtaining representation from management. That is, when we are talking about representation, let's this thing comes to mind later. So when we are talking about management representation, now we are talking about a situation which, let's say, the MD or directors will have to write to us about a particular matter. So that's representation. Discussion with the complex auditor, that they have mentioned that considering the appropriateness of accounting policies employed by the entity, making inquiries into subsequent events, that's like proud year and the like, making a review of the statement as a whole, that is the financial statement. So these are some of the things that auditors naturally should review. Agreed upon procedure. We've discussed it already, but I'm looking at the notes if there are one or two things I should, especially those things that I hold. Letter of engagement. I want to believe we've heard of it, but should we discuss it? Or we should move on? Okay. Letter of engagement usually comes from us. Yes. They will give us letter of appointment. And they will give us an and presentation letter. Those letters will be deal with categories too. If they are under audit evidence section, there are topics under audit evidence, even including this assertion to find details. So basically, we are saying that we discussed that and our notes